Hi everyone. In this presentation, I will introduce you to the profit and loss statements and balance sheets within Link's supply chain management simulation game. The P&L statements can be categorized into product level and corporate level. The product level P&L statements are obtained for both hyperware and metaware. And the aggregation of these two is what you get in corporate level profit and loss statements. Let's look at these statements in a little bit more detail to understand some of their basic elements. In product level profit and loss statements, you understand how well your hyperware and metaware are doing within the three regions. For example, in this case, we are looking at product 5-2. So it's firm number 5 and 2 refers to metaware. 1 would have referred to hyperware. It tells you whether this product is active in channel 1 and channel 2 for the three regions or not. So in this case, for example, this product has been actively sold in region 1, region 2 and region 3 using both the channels. It provides information regarding the sales volumes, the price that you have for channel 1 and channel 2 in individual regions, as well as the weighted average across all regions. Using the information of the overall revenues and the cost elements of product costs, order processing costs, replacement parts, RFID costs, duties and tariffs, it tells you what the gross margin for that product is. Again, you also have information at the region level and an aggregate information across all regions. By considering some additional costs, it then provides you an information about the operating income associated with that product. Now, these cost elements and their descriptions can be obtained in Link's manual. For example, some of these are self-evident, as in order processing. It would refer to how much the order processing costs are for each of these channels, and the amount associated with that cost is provided in manual as $4 per unit and $24 per unit in channel 1 and channel 2. But some of these terms are not necessarily as self-evident, like administrative overhead. In Links, the cost increases by 1% for every 1% increase in sales volume forecast inaccuracy. So that is the cost that you would see in administrative overhead. It captures the inaccuracy in your forecast. So once again, it's very important to see the descriptions of each of these costs in the manual. The duties and tariffs provides you information regarding how much your import duties and tariffs are because of the foreign production content within the product. And you have options to reduce this cost by engaging in postponed production, something that we will discuss later. At the bottom of this profit and loss statement, you see information regarding your distribution center. What is the way in which you have set up your distribution center within the three regions? In this case, region 1 has an owned distribution center, region 3 has an owned distribution center, but region 2 has a third-party distribution center. It tells you also whether RFID has been introduced, whether it's outsourced or insourced, the sales volume forecast for channel 1 and channel 2, service outsourcing level, and then long-term forecast that you have for the product. Finally, it provides some information regarding the configuration of the product at the bottom, which is what this product is currently represented in terms of its numbers for alpha, beta, warranty, bandwidth, and all those things. Now, the net income is a very important performance indicator within links. And this net income is influenced by several factors. And these are something which you must have observed in many of your other learning experiences. It's obviously directly impacted by revenues. That's the top end, which in itself is impacted by how much you sell and at what price. From those revenues, when you subtract the cost, including both fixed costs and variable costs, you get one component of your net income. And in links, you have an additional component for your net income, which comes from the non-operating income. This is the interest that you receive for marketable securities. Now, the marketable securities are that excess cash that you automatically invest in short-term marketable securities every round. So by default, cash in excess of 10% of revenue is automatically invested in short-term marketable securities, and you earn 0.5% per month on these securities. So that's something which comes out as non-operating income. You also get patent royalties if somebody else has created a product that infringes on your product patent. It's very close to your product's configuration. So that's again a non-operating income. And then the taxes that you will have to pay. The corporate tax in links is 50%. And when you include all that, that comprises your second component. Together, that's your net income, which I think account to a large extent for your overall composite score. Now the volume, which is a key driver for your net income, itself is influenced by several factors. It's influenced by the perceived price, which is first of all the actual price that you have established in channel 1 and channel 2, but also the price volatility. So if you keep on changing prices every round, it creates a perception about the price, maybe a favorable one or an unfavorable one. But overall, that perception will have an influence on the volume. Likewise, product quality perception, which is shaped by the specific configuration of the product and the failure rate that customers see over time. The service quality perception, which can be influenced by a choice of service outsourcing program that you have. Availability perception, which is how many times there are unfilled orders, the marketing programs that you have for this product, how many channels do you sell, channel 1 and channel 2 or just one of them. And finally, some uncontrollables. These are external, exogenous factors like the competitors that generate their own demand programs which influence your volumes. It could be also economy, regulatory environment. So there is some bit of such things that has been introduced within the simulation game. The variable costs again can be categorized into the product level costs, the costs associated with reconfigurations, the raw materials, components that you need for this product, labor costs, and then finally production costs. They all come together as your overall product costs. Then you have replacement parts demand, which will be influenced by how much you sold in the past, because you have to make sure that you have sufficient replacement parts for those products. Warranty that you have established for the company. Different levels of warranty is allowed. and then the failure rate, which will influence how much these replacement parts will be in demand. Order processing costs, transportation costs, duties and tariffs. Together, all of them create your variable costs. Now, some suggestions for analyzing your profit and loss statements, especially the product level profit and loss statements, is that you would like to calculate all your cost components as a percentage of revenues each round. And then try to understand which of these costs have the greatest impact on your profitability in each region. This provides you information regarding which cost components require immediate attention, which regions require immediate attention. And then when you check this or evaluate this cost from one round to the other, you get an understanding of the trends associated with your performance, which also helps you gain some insights regarding how you would like to steer the company in the future. Calculate the gross margin per product for every region and every channel. So you would like to gain the information of your profitability in a finer detail so that you can then take your decisions at that level. You would like to know which of these regions, and within those regions, which of the channels are most profitable and which ones are least profitable. You would like to see why that is the case. Maybe research studies would be helpful sometimes. Sometimes you could look at your own performance, the cost factors, the trends that you were examining as far as the percentage of cost as a percentage of revenue. All these put together will give you some understanding of what needs to be changed. You could also think about adding or deleting some channels, if that would make sense from your overall strategic goal. Then you would like to know what revenue, cost, and profit results would be helpful to track each round. Which of these are key indicators of how well your firm is performing? Now, coming to corporate profit and loss statements. This is a snapshot of profit from the operations of the entire firm. So in some sense, it captures the aggregate results that you had in product level profit and loss statements, which is under the all regions column. But it also has some additional information that you would not find in product profit and loss statements. Because, for example, there are some costs that might be company-wide, so you wouldn't see them at the product level, but rather in the corporate profit and loss statements. So, for example, the transportation costs is something which you will notice here. Transportation rebate, it's a 20% discount that you get if you use a single supplier. Again, something that you would see in your corporate profit and loss statements. Some of the fixed costs that have been shown in bold here are things that you would see in corporate profit and loss statement, but not in the product level profit and loss statements. And finally, you also have information about non-operating incomes and taxes. So this provides the net income at the corporate level. So these are things that, again, you need to look at the links manual to understand exactly what all these different components of costs really mean. Along with the current month's profit and loss statement, you also have information of the historical corporate profit and loss statement. And in addition, you get information as a percentage of revenues. So the cost components as a percentage of revenues, the previous month and the current month. It helps you to understand what the trends are, whether the costs are in control or they're going out of control, which of these costs need immediate attention, and how do you want to change some of your decisions going forward. So again, when you're analyzing corporate profit and loss statements, you would like to see the costs as a percentage of revenues. Just as in the case of product level profit and loss statements, here you would like to know which of these costs have the greatest impact on your profitability, why that is the case, and then try to understand the trend in some of these costs. You also want to see the gross margin per unit for each product. Which ones are more profitable, and why is that the case? Can there be something that can be done to change these results going forward, especially if the results are not in line with your expectations? Should you consider reallocation of your resources between products? Can you stop selling one product in the middle of your simulation and perhaps do better by doing so? How has your net income changed from round to round? And why is it going in that direction that you notice? Are there any corporate results you should record and track each round? Why should you do that? And how would you use this information? Such kind of understanding would help you to use different kinds of decision options to your best interest. So you would like to try using these different levers that are available and take decisions that can help this firm become more and more profitable over time. Now, along with the profit and loss statements, you also have information of balance sheets. Now, balance sheets is an account of your assets and liabilities within the firm. So in the top part, you see the firm's assets. These are the resources that the firm has to generate revenues and profits in the future. So you have all the inventories, finished goods, as well as subassembly components, raw materials. They can all be converted into sales in the future. You have information about the cash in hand, marketable securities, and then finally the total assets at the bottom. Under liabilities and equities, you have information about how your firm finances its operations. What's the corporate capitalization? The dividends. For every profitable month, you have a policy of keeping 30% of that net income for dividends, dividend payments. So it gives you information about that. Retained earnings, loans if there are any, and then total liabilities and equities. And at the bottom of your balance sheet, you have information about the epsilons that are on order and that are going to be delivered in the next month. Since epsilon has a longer lead time, one extra month that you have to consider, the balance sheet is one place where you understand what your current ordering status associated with those products are. So you want to keep that in mind to understand what would be your situation with the production when these epsilons will arrive. Okay, so for example, here you have information about epsilons that are on order for delivery in region 1, 32,500. They're going to be delivered from the supplier D and using surface transportation, as well as 32,500 from supplier D with air transportation. So you have split the quantities between surface mode and air mode of transportation. For region 2, likewise, you have information, and region 3, there is no inventory of epsilon to be expected the next month. So you want to keep track of this as you go forward. With that, I end my presentation, and I'll discuss some more details about Link's supply chain management simulation game in my next presentation. Thanks.